Hello traders, Gary Wagner here just before 12 noon in Honolulu, 5 o'clock in New York. It is Monday, November the 6th, 2017, and this is the Daily Report for Gold and Silver. Nice upside spike in both gold and silver. This in reflection of a big spike in crude oil prices. Gold closing up $13.60. 1282.80. That's most active December's contract, and that is just above our current pegged resistance point. Silver also surging above $17, trading up 39 cents, 17.23. Dollar slightly lower, off about 0.25% at 94.62. And oil, the big mover, up $1.60, about a 3% move to close at 57.24. Traders, we certainly saw gold have a solid, nice uptick today, currently trading up over $13, $13.30, up about a full percentage point at 1282.50. This in response to a weaker dollar, but only about 20% is the weaker dollar. The other 80% of today's upside tick is directly attributable to buying in the market. A safe haven market sentiment emerged as a corruption scandal emerged in Saudi Arabia, really moving the price of oil, and we will take a look at an oil chart in just a minute. However, at the same time, it really must be noted that even with today's upside spike, we are still solidly within the confines of the upper end of this narrow and defined trading range that has been so prevalent in gold. Gold has traded above this particular price point, and that is a 50% retracement sitting at 1281, 1282. And of course, that's a retracement of the largest rally this year, and that has absolutely defined upper level resistance in the market. At the same time, we can see that the lows that came in at our defined support level, which come in roughly at 1262, and that is the 61.8% retracement. What is unique about today's close, traders, is the fact that the close is just at the resistance point that we have identified. Therefore, if we get follow-through buying tomorrow in the market, we do have our first solid indication that a bottom actually has formed as in hand. We identified the bottom on the basis of these two low prices giving us that double bottom. These last lows that were achieved late last week, this is a daily chart, of course, but these last lows that were achieved last week did not come to or trade below the lows achieved prior to that. And therefore, I still think in terms of a solid support level, this area is a very valid area, 1262. The fact of the matter is, though, that we did see the market trade and close just at resistance, which means resistance could become support. And traders, another technical study that lends credence to the possibility that 1262 is in fact a strong level of support, as we have been drawing that in with a retracement level of 61.8, based, as I said, on this long rally here, is the fact that when we look at our 50-day moving average in red and our 200-day moving average in green, we can see that price structure has stayed above the 200-day moving average, even though it has fallen from grace and fallen down significantly. The big picture in terms of the long-term standing of gold pricing, as long as prices are above the 200-day moving average, we can, on a long-term basis, still believe that a bullish model is in play. It's above the 200-day moving average. However, we want to see it above the 50-day as well. So in as much as I think we might have the potential for a bottom here, we certainly do not have a runaway market, not as of yet. And traders, lastly, as promised, I did want to take a quick look at crude oil. We can see a tremendous spike in crude oil today. It's represented by this bar right here, in which the market opened below 56 and closed above 57, 57.28. As I said, about a 3% gain, a large spike. We did have a spike that took us above that resistance level at 55 on Friday, but news out of Saudi Arabia propelled this market dramatically higher, and oil is considered to be a vast indicator on inflation. Higher oil pricing represents the real potential for higher inflation down the road, and that, of course, is bullish for gold. Traders, one day does not make a market. However, we are seeing the first signs that we would want to see to look at this market as having completed that downward cycle and moved into an upward cycle. The key, though, traders, is the fact that we're not dealing with a straight pivot. And what I mean by a pivot is a point in time in which the market has gone down, and then at some point you get that V, and that V gives us that key reversal indicator, such as here, straight down, and then we get that spike up. Rather, we have had this flat bottom, we have had a flat top, and that has been what has illustrated more than anything else that we have been in a narrow and defined range. But as I said, for the first time since we have been caught in this muck, we have actually seen gold prices close above that resistance. So therefore, although we are currently flat with no active trades, a follow-through move in gold would signal a buy trigger in the market. Traders, although one day does not make a market, and the fact that we have closed at and slightly above resistance doesn't mean that we're going to see runaway higher pricing. However, it is the indication that we have been looking for as possible technical confirmation that we are finally out of this muck, that narrow and defined trading range that's been so prevalent over the last 2 weeks, with 1262 as major support and 1282 as major resistance. If we do get some follow through over the next couple of days, that will signal a conclusion to the current downtrend and signal the beginning of a new rally. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update, and bye-bye.